Welcome to Markets Now. I'm Michelle Rourke with Randy Martinson Ag. We are seeing some mixed trade in the cattle, hogs lower, and the grains are lower as well this morning. And Randy, it's really in the grains a lot about Mexico and Mexico and Canada 25% tariffs that President Trump says he will be putting into effect on February 1.
It is. I mean, that's really taken all the oxygen out of the room right now. I mean, that seems to be what the market is focusing on. And, we kind of had hints of it that was going to possibly happen. We were hoping that, Mexico was making some strides to, kind of conform to what the administration was asking for. Canada doing the same. So it was kind of a surprise last night when President Trump came out and said that he is moving forward with that. Mexico has announced that they're going to make some retaliations, but we haven't heard much out of Canada at this point.
No, let's talk about the retaliation list that we've seen so far. Pork on there, but we don't have any of our other majors on there.
We don't. Yeah. Wheat's not on there. Corn's not on there. And beef isn't on there. But there's, some of other minor products that are being listed on there. So it's kind of a surprise. But I suppose and also Mexico is going to not do it on auto or auto manufacturing parts. So that the biggest ones that we kind of export back and forth are the ones that are going to be excluded from the list.
Right. But pork is on the list, and obviously that is a big one. Mexico's our number one customer, right?
Right. Pork is on the list, and then we've got, fruits, bourbon whiskey is on the list, and then also manufactured steel and aluminum. So those are the big ones that are being on the list at this point.
I thought it was interesting that we did not see oil on the list for Canada. It sounds like the president may leave oil off of the tariff list there.
Right. He did mention that excluding that, which would, of course, help with the inflationary side, in the U.S. instead of driving that market up. But oil is being left off on the Canadian one, which is a big one. I mean, we import a lot, and a lot of it comes through the U.S. So that it will help a little bit. But all the other products, which, for farmers, it means that we're going to see corn being on the list, and then we're also going to see probably fertilizer on the list.
I was going to say, fertilizer is a huge one that I think people forget about, how much we get, especially phosphate from Canada and other products.
Oh, exactly. I think it's something like 80% of the some of the minor fertilizers do come out of Canada into the U.S. So that's going to be a big one going forward, especially now as we're getting ready to start our planting season.
So in the case of corn and soybeans, could we also make a little bit of a case for some end of the month profit taking in those markets, just because we did hit some resistance on charts again this week?
Oh, most definitely, especially corn. Corn traded up above that 495 level, and that was highs we haven't seen here for years. And we're also looking at some the funds continuing to push and continue to go long the market. Open interest has been climbing. I saw that open interest for corn was at 2 million, which is the highest it's been since like 96. So we have seen a lot of trading come in. So I wouldn't be surprised that, a lot of it was knee-jerk reaction, but there is a lot of profit taking going in to the month end and to get ready for the start of what we're going to see next month. And that is the base price for crop insurance being set.
Absolutely. South American weather, we've been watching that as well. We've got areas that are too wet, too dry in South America right now.
Yeah, that's right. I mean, Argentina continues to see warm, dry forecasts. Now, it's been flip-flopping, but the last was updated that showed that the hot and dry is going to continue for at least, 5 to 7 days. And there is even hints that it could go out in the next couple of weeks. So that's going to continue to likely lower production estimates coming out of Argentina. And rain continues to fall in parts of Brazil, which is slowing down their soybean harvest, which in turn slows down the planting of that second safrinha corn crop. So we still have that fundamental side of things is a little bit friendly to the market.
Right. Okay, so the wheat market is down today, kind of in tandem with corn and soybeans and maybe some of these tariff fears, but we could possibly have another higher weekly close this week, right?
We could, and right now it's looking like we will as far as the wheat is concerned, and it's shaping up to be actually a key reversal for the weekly close. So we actually did see a higher high, a lower low, and hopefully a higher close for the week on wheat, which is a good technical signal and shows a weekly reversal.
Has that been all fun short covering because we've been in the end of the month, or is there more going on? Are we finally starting to recognize some of these production issues?
Well, I think it's a combination, but I think, we did see quite a bit more news coming out of Russia where they're looking at lower production. They're tightening up their exports the next 6 months. They're going to have a lot stiffer quotas in their export market. Their wheat crop was rated at a pretty low rate. So I think all of that's kind of coming in to help, fuel the fire a little bit. Also, India is starting to see a little bit more talk about the possibility of, their wheat prices are too high and they've been trying to control them. It hasn't been working. So it's likely they're going to have to import some. It likely won't come from the US, but it'll take supply off the market, which will help the US get into some other markets for exporting. And that's really the missing link that we need to see for wheat.
Yeah. And I guess we should also mention the higher dollar may be having an impact here this morning, which is tariff related. So,
Exactly. That dollar has been kind of moving back and forth, but today it's up pretty good, mainly because of the talk of the tariffs.
so the cattle market, we did see higher cash trade in the South yesterday, I think up to 208 as far as the volume. Yet the futures sold off yesterday and live cattle are seeing some pressure today. Is this topping action, do you think?
Boy, when volatility increases like this, you normally start to see a little bit of a topping action. We've seen, all-time contract highs again hit in the cattle markets this last week, especially live cattle. Feeder cattle followed through with it, not as aggressive as what we saw live cattle earlier in the week. But I do think we are seeing a little bit of a topping action. There's rumors about the border opening with Mexico, with them not being part of the tariff list. That kind of is questionable. But right now supplies remain to be tight, but prices have pushed an awful lot, and this market needs to see a correction. And I think that's what the market's kind of setting up for.
Yeah, and we have the cattle inventory report out this afternoon too, so that'll be a big one.
And I think that's last week's cattle on feed report, this week's cattle inventory report. I think that's what's kind of helped keep the cattle firm and kind of, continuing to see some highs. I wouldn't be surprised if we haven't been buying the rumor, we'll sell the fact.
Yeah, and it's ended the month, so the funds are pretty long. I guess you would assume maybe you get some profit taking just as a result of that.
Oh, exactly. Yeah. I mean, they need to rebalance their portfolios. And I'm sure that's something that the funds are looking at doing here as we go into the end of January, start of February.
Gotcha. And like we said, hogs are down this morning. Most of that is tariff related, right?
That's what I would say. I mean, I think it's a knee-jerk reaction to the idea that they're on Mexico's list. So I think that's what's pulling that market down.
Okay. Thanks so much. Randy Martinson with Martinson Ag. That is Markets Now.